Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we're looking at here is a chart of the market. These are intraday dynamics, our proprietary indicators, which suggest to us where the market is likely to head. As you can see, we have red bars suggesting the bears are in control. We have green bars suggesting the bulls are in control, or perhaps an extreme, but certainly a trend above the trend is nice in the green. Down here we have the green, which again suggests the bulls are in control. We look for divergences amongst these indicators. Today is Friday, the 14th of August, 2008. 2009. Where did that come from? 2000 must have had that on my brain. But nevertheless, we're going to look at here Friday, Thursday, Wednesday, Tuesday, Monday, and we'll actually scroll back just a little bit to see where we're coming into the week. As you can see, we're fully bullish here, bullish there, but definitely was a slide for the bears late in the session last Friday. As you can see, a complete break of the trend, retest from there to finish at the close of the low of the late session close. And that actually followed through, and as you can look down here and see a full divergence. Again, we look for divergences. Full divergence there, bearish, bearish, the retest of the trend. Excellent shorting opportunity for the market. That, of course, was right around 1008. The market would go on to around 998 for the day before rebounding. Essentially, it's a very choppy environment. Has been around this 1000 level, this extremely round 1000 level. We've seen a lot of choppiness, but if you can, navigate the best you can do okay. And we'll look at that in a second. But as you can see, coming into Tuesday, again, complete breakdown. This was an errant move, complete breakdown. Full bearishness right here, quadruple threat bearishness with the trend, no refill of the gap, and onward did the bears take the market, as you can see, accelerating right there, and a close near the low of the session. But we come in the next day, get bullishness here, divergence there, full bullish, confirmation that the market is going to move higher. This, of course, was a Fed day. Did get the obligatory drift higher, and it was a comfortable day. Save this, of course, going into the announcement, save this choppiness as to be expected on a Fed day. And of course, more choppiness would come on Thursday. Again, full bullishness was the case here, so we did get a close at the high of the session, but just weren't able to hold on to it. As Friday we came in, had actually a green bar, but quickly broke below the trend, as you can see right here. But more importantly, a quadruple threat bearish bias was the case right here around, again, 1008, kind of a key level, 1008 to 1012. 1008 full bearishness, and unfortunately most of our systems did take a key off of that and went short. So we're having a nice day today. We'll look at that in a second, but that's where we stand. Full bearishness. We are seeing a little bit of a divergence here, but again, just retesting the underside of the trend. Most of the move has already occurred. Will we get a move to continue it later on? It's definitely possible. Likely, probably not, given that we do have this nice support level that we've seen for the week in the S&P 500 futures. So there you have it. That's the intraday look at the market. We're going to go ahead and look at the daily chart of the market right there. And as you can see, we're still comfortably bullish. I say comfortably in that overall bullish because we have had our short-term bias grayed out in status. Short-term bearish bias is the case here for our momentum standpoint. Short-term bullish has also been grayed out, and actually we had a take profit signal. As you can see back here, we were taking short profits right around here. We had that huge move. Probably not going to get that much of a move down, but definitely looks like we're printing an ET signal. We actually had the extreme move there, relative extreme move, came back to retest the trend, a little bit of a two-bar reversal buy setup, and then now we're printing an ET sell setup. So, will we move lower? It'd be great, actually. Pick up some more stuff right around here, around 950, come down here and retest this, and then blast off higher. Will that be the case given it's the autumn? Might not be. As we move into the fall, we might get some choppiness around 900, but overall, definitely a bullish bias is the case right here. That's what we're looking at. That's where the market is. That's where our indicators are telling us. So that's where we stand. Currently bullish, still bullish from 960. Essentially, scratch that trade, maybe loss of 20 points after going bullish right around 800. Right here. So that's where we stand on the market. Still comfortably bullish, but beginning to wane just a little bit. but definitely looking for a retest would be nice around the 950 level to confirm that the move is legitimate. We'll see some higher prices still. So we're going to go ahead and look at some of our new strategies that we haven't included in our numbers generally. So here's the day trader 18.0 catching. It's actually a swing trader catching some beautiful moves. Nice hold there. Short caught a little loss there, but right back to the long side there. And actually currently no exposure. Just got stopped out. I was looking at the wrong thing. So there's the day trader 19.0. Beautiful short position right again right here at 1006 to 1007. Nice short position there for a nice 12-point gain in the mini S&Ps. Of course, an errant. Look at that. Had a couple of these. This market's been so volatile lately. Had a couple of whip outs. Calls the right move, but of course, when you go long on this extreme move, I guess it's bound to happen. Stopped out just off the low, right before a swing, right up into the highs. Day trader 17.0, nicely short also from 1002 today. So a nice 7-point move there. Day trader 16.0 also short today. One little winner right over there. So in this environment, whoa, very nice. Day trader 15.0 just booked its profits, went short around 106.50, just booked its profits at 996. So a nice 10-point profit there. Again, we're not including these in our numbers, but you can certainly subscribe to these new portfolios or these new systems that we're going to be coming out with. A little bit more choppy here. Nice winner, but countered with a loss. Day trader. These are actually slightly older. These are about 4 months old right here, and you actually can get these involved in your portfolio. So there's the day trader 12.0, and we'll look at the 11.0. Not much going on there. So where have our portfolios been? Well, look at that. Today, the venerable MapDT, trading some of our longest running systems, gains another $3,225, 16%. And there you see it. This was as of around 12:30 Eastern Standard Time. There's the but the dual day trader ES is spanking everyone. It's catching a 25% gain today. Last print 994, essentially we're right around there today. But both systems went short right there. The grind and the ES day trader 1.0. So another astounding 25% return for the dual day trader ES. If you're interested in dual day trader ES, you can either just buy one, two, three, $5,000 per increment, 1, 2, 3, 4 lots, or if you go up to 4, you can actually go to the this is a triple threat HR. So we need to go back to the home page right here, and under current promotions, dual day trader ES20. Now this is $20,000 account, and you can actually save money right off the bat. What this is essentially 4 units of the dual day trader ES, so a $20,000 account. Still the amazing returns that we've seen. Beautiful last 3 months for the dual day trader ES20. What also is interesting is the new triple threat HR portfolio. Now this is on our 2009 portfolio returns. Just click on that, and that'll bring you to this page. You can just scroll down and look at all of our recently updated numbers of all of our portfolios. And here's a triple threat HR, which is kind of interesting. It's only $1,500 for 3 months. It's got 2, 2, and 2. It's kind of a combination of the dual day trader ES and the dual day trader DS. So it's an interesting combination. 1,820%. Has a pretty bad drawdown, maximum 152%. The average drawdown, of course, is just 32.28%. So astounding returns. If you want to subscribe to that, again, you just click on the subscribe to TTTHR, and what you can do is, now the dual day trader ES20 is $2,000 for every 3 months, but just enter promo code DT Video, and you'll be able to save 20% off both those portfolios, either one of them. Go to the website, chat with the support team live. If you have any questions, shoot us an email to admin@MiniAnalyst.com. And we hope you enjoyed this quick look at some of our systems and our market prognostications. And we'll see you next time.